ways that we try to keep score and store value and exchange value. Um, and of course, there's other ways you can describe it. It's the most saleable good, right? So if you were to go to trade, what do you bring with you that you have the highest conviction that you could find a buyer for either what you want or something else that you can then trade for what you want. And so money is basically that which has certain characteristics. It's long lasting. It's reasonably portable. It's divisible. At least moderately fungible. It's got a number of good characteristics. It's generally got its scarcity in the sense that it's hard to increase the supply of it rapidly, and yet unintuitively a lot of it's already out there because people have it and accept it. So it's not something so rare like meteorites, for example. It's something that's both a lot of it exists, but it's hard to make more of. Those things in any given technological era tend to become money. They become the most liquid thing you can exchange value with, and it generally becomes a unit of account that other things are compared to.
Do we need banks? What do you think?
Banks serve a purpose in different. The way that I generally describe it is that they served a purpose, but that they caused issues along the way. And the way I would describe it now is that with Bitcoin, it basically replaces the need for a central bank. It's this kind of core settlement ledger that if it were to become significantly large, it doesn't mean it replaces it today, but it means that the underlying ability is there to replace something like a central bank. And then I would say that banks would still exist in some form, just on the periphery. They're more optional, right? So we had this kind of situation over time where banks were on the periphery. They would provide certain services. They were optional. Then they gravitated toward being the literal center of the system. Like a dollar is a liability of the Federal Reserve. That's what a dollar is. That's what fiat currencies are. Literally, banks are the center of money now. And I think that we can gravitate back toward no, like banks are not at the center of the system. They just provide services at the periphery of the system for those that want them. And I think that's in long term that's healthier.
How long do you think we have before the US dollar is?
It's entrenched there. And then the other point of that is that the majority of international debts are denominated in dollars. So there's over 13 trillion in dollar denominated debts, plus all sorts of like swaps and options and other layers on top of that. But just literally securities and loans over 13 trillion. And all of that represents inflexible demand for dollars, right? So that's more than the monetary base of dollars. There's more dollars owed to international creditors by various countries and their corporations than dollars exist. So there's more demand than there are dollars, at least base dollars, and nearly as much as broad dollars. And so that's inflexible demand. And so I think that Gordian knot has a very long time to unravel. And I think it's a long process. I don't think anything stops this train anytime, in the next several years.
I mean, what's the way out here? What do you think we should do?
I think basically you have parallel systems, right? So one is something that isn't diluted by any sort of central entity. And I think and then if you're a corporation or a government, you can do similar. Generally speaking, the smaller the entity, the fewer decision makers, and the larger the entity, the more decision makers, with some exceptions. Um, and you just kind of opt out and you protect yourself. And I think there's a very long process of more and more people doing it. And then along the way, what we're doing is we're testing this new system. We're saying how secure is it really? How robust is it really? What needs to be improved about it, either on, say, the base layer or the various layers that click on top of it and enhance it. How can we make this better and truly replace, as many components as possible of the prior um, entropic system?
What was your journey into Bitcoin? How have you discovered it?
For me, it's like a lot of people, it's multiple touch points, right? So I mean, back in like literally 2010 or 2011, someone was like, "Hey, I'm mining this Bitcoin on my gaming computer," and I thought, "Hey, in linear form, it always looks either like a bubble or like a dead bubble. It's never really like it's not a normal price chart because its price movements were so crazy. So if you look at a price chart in 2013, it looked insane. You look at it in 2017, it looks insane. But after that significant time, you look at the price in log form, you're like, okay, there's actually kind of a cycle here that it's going through. That's interesting. Um, And so simple things like just making sure to follow it in a bear market, and just a couple like clicks is when I got in that whole kind of bear market period.
Remember the days 2017. I've been through a few cycles myself, and probably one of the most brutal, which we gone from I think almost 20K down to 3,000. So
Yeah.
it was something for sure. Where do you see Bitcoin? Is a store of value? Is a currency? What's your take?
I mean, I think it's all of it. I think it's money. I think it goes through different adoption periods over time, right? So one of the first things it was used for is a collectible. People liked it because it was the best way of solving something that people have been trying to solve. At something like 20 trillion now is tiny compared to global assets. Some of the areas that are shockingly big are fiat currencies and bonds. I mean, they're hundreds of trillions of dollars of value, and I think a lot of that is better served in Bitcoin. And just people, it's obviously got high volatility, which keeps people out. It's got technological uncertainty. I mean, it's a 15, 16-year-old project. So, people, nation states don't put their $1 trillion sovereign wealth fund aggressively into it until maybe it's 30 years old and it's 10 times bigger, right? So I think, and the way that I've described this before is that it has to reach certain thresholds before it even becomes interesting to higher thresholds. So back when the market cap was like $1 billion and it was pretty illiquid and like literally like one wealthy person could just buy in that day and move the price, that's not interesting to sovereign wealth funds or BlackRock or billionaires, because it's just too small and illiquid for them to even put a significant amount of their capital into it. But then when it starts to become bigger, and they can say, well, push something like that. And they're not the incumbent powers. And so they have more of an incentive to like, let's try this new thing out. It's like we're not going to put our entire reserve into it, but this technology seems to be useful, so we'll leverage it. And so I think that especially starting with smaller countries, I think it's silly not to. Like, I think the only wrong number is zero, which is if a country just has zero exposure. I just think, especially if you're a small, nimble country, like, there's an opportunity here. Same thing for corporations that are doing things like what MicroStrategy did, what Metaplanet is doing. There's clearly an arbitrage there for corporations that exist in pretty big liquid currencies to basically borrow the thing that loses value and hold the thing conservatively that gains value. I think there's a lot more opportunities for that, and it's hard to judge the time frame. But as accounting standards have improved, and as some countries have done much more coins in these things than there were 3 years ago, when it was just GBTC. So I just think it's inevitable. It's pools of capital are going to do that. I've described this as like an API into the fiat system. People have these existing brokerages, and this was like an upgrade that the fiat currency system decided to make to plug into Bitcoin. It's not something that Bitcoin decided. It's something that the BlackRocks and the SECs of the world decided, and so they opened their system to plug into Bitcoin a little bit more than they did a year ago.
I also believe Bitcoin is money. So then if I state Bitcoin is money, but we can have ETFs, well, then I'm choosing who can or who can't use money. And by definition, Bitcoin cannot be money. So I'm open to the free market. And if this test is going to break it, well, then it means probably it is not what I thought it was. I completely agree with you. And when it comes
price up or a little, we'll shut off that time. It's not a big deal. It's employee light. It's capital moderately intensive. Mostly it's electricity cost sensitive, and so they can be really useful. So I think it's good for the grid in the long run. I think anything goes through kind of growing pains. So when Bitcoin goes up, 20x in the course of a few years, that can lead to these little pockets of inefficiency and overbuilding, and even cause some power issues in a given area. But I think as this becomes just a normal large part, then it just kind of settles in. And I think if anything, the funny thing is that the electricity consumption of the network in the long run won't be as big as people think. And therefore, if anything, it'd be nice if it was bigger, because it probably could help smooth out the grids better. Critical bug and goes offline, which a number of these have done. Then the question is, well, that was like a perpetual motion machine that kind of made sense while it was running, but now that it's off, anyone can create an infinite number of different passed to the ledger, and there's no energy input. So you have to kind of literally just get together in a room and decide what is the state of the chain we're going to restart from. Whereas I think having that external component, energy, makes the system more robust, and it makes it not circular logic. My defensive proof of stake is kind of two things. One is, if you wanted to have a smaller network that you don't want to be brute forced attack, the price to attack a proof of stake network is pretty high. You have to keep buying coins, and it drives the price up. And two, it's efficient and fast. Which, if you're trying to run something like a stablecoin network or some sort of thing where you're not trying to make the most bulletproof decentralized like thing around, and you just want the coins have relevance for probably quite a while. When Salvador wants to issue debt to have a hotel built, and they don't really have domestic capital markets, and then they put it on a either layer on top of Bitcoin, or even they put it elsewhere. I can see value in that. There's been interesting research. Like, there are programmers on other networks that have they've pushed forward the computer science of rollups and things like that eventually can find their way to Bitcoin in some capacity. So I think that it's partly going through this iterative process to see what works. There's a lot of scams there, obviously, but the short answer is that outside of Bitcoin and stable coins and these little kind of research niches, I've been publicly skeptical on the value of most of that other stuff.
Most of my portfolio, if not all of it, is basically Bitcoin. I like to have a small percentage where I speculate, but it's so insignificant that it doesn't actually impact much. It's like going to the casino on a weekend and have fun and gamble on the roulette, So that's why I have it. And when it comes to broader adoption for Bitcoin,
probably over the next 2 cycles, doesn't mean it holds 100% of the time, but it that general correlation is pretty strong. And so during periods where liquidity is more constrained, I would expect to see Bitcoin struggle to some extent. It could be a bear market, or it could be a sideways market. And when liquidity is pretty good, I generally think Bitcoin's probably going to do pretty well with it.
As Michael Saylor says, stay humble and stack sats. I've been doing it for 11 years. It worked out okay. And I'm 100% confident in an 11-year time, or maybe hopefully we'll have another chat. It's going to be the same. I should live on a Bitcoin standard, as we discussed off camera. So price doesn't impact or bother me anymore. There was a time where it was bothering me a lot, right? Because especially in the beginning, when you have less conviction and you FOMO in for the price and you want to be a millionaire in 3 months, but then you realize sats after sats that you stack, the price doesn't actually matter much. If there